Most people learn about IRMAA the same way, by opening a letter from Medicare and seeing a bill that is hundreds of dollars higher than they expected. According to SSA POMS HI 01101.020, updated December 2025, at the highest income tier, a single Medicare enrollee can pay $578 per month, more than the standard Part B and Part D premiums combined. That's $6,936 in extra Medicare costs in a single year, based on income earned 2 years ago. In this video, you'll know exactly what IRMAA is, who pays it, how the 2026 numbers would break down tier by tier, and what the official process is to request a lower amount if your income has changed. Before we get into it, a quick note. Everything I share here is for educational purposes only. I'm not a licensed insurance agent or financial advisor, and nothing in this video is personal advice. Always work with a licensed Medicare professional for decisions about your specific situation. Now let's get into it. If you're approaching 65, or you recently enrolled in Medicare, there's a cost that almost nobody tells you about until the bill arrives. It's called IRMAA, the Income-Related Monthly Adjustment Amount. It's a surcharge added on top of the standard Medicare premium, and it applies to enrollees whose income is above a certain threshold. Here's what makes it particularly surprising. The government does not look at what you're earning right now. According to SSA POMS CHI 01101.031, SSA uses your tax return from 2 years ago to calculate how much you owe today. That 2-year lookback catches many people, especially professionals who retired after a high-income final year. Today, we're going to break down how IRMAA works in 2026, what each tier actually costs, and what official options exist if your income has since dropped. Let's start with the basics. Medicare is not a fixed cost for every enrollee. According to CMS, the standard monthly Part B premium in 2026 is $202.90. That's the amount most enrollees pay. But if your income is above a certain threshold, the federal government adds an extra charge on top of that standard rate. And that extra charge is the IRMAA. According to the CMS 2026 Medicare Parts A and B Premiums Fact Sheet, released November 14, 2025, these income-related monthly adjustment amounts affect roughly 8% of people with Medicare Part B. That may sound like a small fraction, but it represents millions of Americans, and the people in that 8% often have no idea they're in it until SSA sends them a notice. IRMAA applies to 2 parts of Medicare: Part B, which covers doctor visits, outpatient services, and durable medical equipment, and Part D, which covers prescription drug plans. The surcharge is added directly to your monthly premium, and if you're collecting Social Security, it's deducted automatically from your benefit check. Here's how SSA calculates it. According to SSA POMS HI 01101.031, SSA receives income data directly from the IRS. For 2026, they use your most recently available federal tax return, which is generally your 2024 return, filed in 2025. In some cases, SSA may fall back to the 2023 return if the 2024 filing isn't yet available. That means the income driving your 2026 Medicare premium is income from as far back as 2024, not what your bank account shows today. Now let's look at exactly what those surcharges cost in 2026, tier by tier, in plain numbers. According to SSA POMS I 01101.020, updated December 2, 2025, IRMAA is structured as a 5-tier sliding scale. The tier you land in is determined by your 2024 Modified Adjusted Gross Income, or MAGI. Let me walk through each one. The standard Part B premium, according to CMS, is $202.90 per month. Everything above that is the IRMAA surcharge. Tier 1. Single filers with 2024 MAGI between $109,001 and $137,000. For married couples filing jointly, the range is $218,001 to $274,000. Monthly Part B premium, $284. That's $81.20 per month above the standard rate, roughly $974 extra per year. Tier 2. Single filers between $137,001 and $171,000. Joint filers between $274,001 and $342,000. Monthly Part B premium, $405. That's $202.90 extra per month, about $2,435 extra per year. Tier 3. Single filers between $171,001 and $205,000. Joint filers between $342,001 and $410,000. Monthly Part B premium, $527, roughly $3,895 per year above standard. Tier 4. Between $205,001 and $499,999. Joint filers between $410,001 and $749,999. Monthly Part B premium, $649, about $5,356 extra per year. Tier 5. Single filers at $500,000 or above. Joint filers at $750,000 or above. Monthly Part B premium, $689. That's $487 more per month than the standard rate, $5,844 in extra Part B costs per year. Part D IRMAA surcharges follow the same 5-tier structure. According to the same SSA POMS I-01-101.020 table, the monthly Part D surcharges are $14.50 at Tier 1, $37.50 at Tier 2, $60.40 at Tier 3, $83.30 at Tier 4, and $91 at Tier 5. When you add Part B and Part D together, a single filer at the top IRMAA tier can pay $578 extra per month in combined surcharges, $6,936 in extra Medicare costs per year. For a married couple where both spouses are in Tier 1, the combined annual extra cost comes to about $2,297, based on the SSA POMS HUTS 01101.020 figures. There's also a separate rule for people who are married but file their taxes separately. According to SSA POMS ICHI 0110001.020, married filing separately filers jump directly to Tier 4, starting at $109,001, meaning that filing status carries a much heavier IRMAA cost structure than single or joint filers at the same income level. Now here's the part of IRMAA that surprises people most, especially those who retired recently. Here is the most common scenario. Someone retires in early 2026 after a long career. Their income drops substantially or stops entirely. They feel confident their Medicare costs will be modest. Then the Medicare premium notice arrives, and it shows a Tier 2 or Tier 3 IRMAA surcharge. What happened? According to SAPOM 01101.031, SSA bases 2026 IRMAA on 2024 MAGI. If 2024 was a high-income year, a final working year, a year with stock option vesting, a large bonus, a real estate sale, or a large 401(n) distribution, that 2024 income follows the enrollee into Medicare for the first 2 years of enrollment. The system has no way to know that 2025 or 2026 looks different. It's working off data that may be 2 years old. This dynamic is especially common among people who take large distributions from retirement accounts in the year before enrolling, not realizing the effect on MAGI. It also affects business owners who sold a business or practice in a high-income final year. For married couples, it's worth knowing that each spouse pays IRMAA independently. If a couple filed jointly and their combined 2024 MAGI places them in Tier 2, both spouses pay $405.80 per month for Part B, according to SSA POMS HI 01101.020. That's $811.60 per month combined just for Part B, compared to $405.80 if both paid the standard rate. The official CMS and SSA systems will continue applying the IRMAA surcharge until more recent income data is available, unless the enrollee takes action to update their record. And that leads us to the most important part of this video. If your income has genuinely dropped, there is an official path to request a lower IRMAA. Here's how it works. SSA does not leave enrollees without options when income drops significantly. According to SSA POMS I 01120.005, there are 8 qualifying life-changing events that allow a beneficiary to request a new IRMAA determination, one based on a more recent tax year, or in some cases, a current year income estimate. Here are all 8. 1. Death of a spouse. A surviving spouse's income often changes significantly after a partner passes. SSA allows a new IRMAA determination to reflect the updated filing status and income. 2. Marriage. Entering into marriage changes filing status and can shift which IRMAA tier applies. 3. Divorce or annulment. Moving from a joint filing to an individual filing changes how income is evaluated against the brackets. 4. Work reduction. A significant and documented reduction in employment income qualifies. 5. Work stoppage. Full retirement or cessation of employment qualifies as a life-changing event under SSA POMS 01120.005. 6. Loss of income-producing property. If property that generated rental or investment income was destroyed, confiscated, or otherwise permanently lost, SSA recognizes this as a qualifying event. 7. Loss of an employer pension. If a former employer's pension plan was terminated and income dropped as a result, SSA can use a more recent tax year. 8. Receipt of an employer settlement payment. A lump sum settlement from a current or former employer can spike a single year's MAGI dramatically. Because that income is not recurring, SSA allows a new determination to remove that one-time effect from future IRMAA calculations. According to SSA POMS HI 01120.005, a significant reduction means one that actually decreases or eliminates the IRMAA for that year. A standard investment loss, a higher-than-expected medical bill, or voluntary property sales do not qualify as life-changing events under SSA's rules. The 8 listed above are the defined qualifying categories. If one of those events applies, here's the step-by-step process to put SSA on notice. To request a new IRMAA determination based on a qualifying life-changing event, SSA uses a form called the SSA-44. According to the Social Security Administration, the December 2025 edition of the SSA-44 is available to download directly at ssa.gov for forms /sa44.pdf. The form walks through each qualifying event and asks for the date it occurred, the nature of the income reduction, and your estimate of the updated MAGI. According to ssa.gov/Medicare IRMAA, there are 3 ways to submit a request. First, you can complete and mail or fax form SSA-44 to your local Social Security office, along with supporting documentation. Second, you can call the Social Security Administration at 1-800-772-1113 to initiate the request by phone. If the change involves an amended tax return, You will need a copy of the amended return and the IRS acknowledgement of receipt. Third, if your 2024 tax return was amended and the amended return lowers your MAGI, SSA can update your IRMAA record once you provide that documentation. And if you've been overpaying as a result, SSA may apply a credit to future premium months, according to ssa.gov, Latch, Medicare IRMAA. A few practical notes on the process. The request should be filed as soon as possible after the qualifying event occurs. SSA requires documentation. A statement alone is not sufficient. Proof of the life-changing event and evidence of the updated income level are both required. The sooner that documentation is in SSA's hands, the sooner a corrected premium can take effect. Here's what we covered today. First, IRMAA is an income-based surcharge added to Medicare Part B and Part D premiums, affecting roughly 8% of Part B beneficiaries, according to CMS. In 2026, based on SSA POMS 011012020, the monthly Part B surcharge ranges from $81.20 at Tier 1 to $487 at Tier 5 for single filers, with Part D surcharges adding between $14.50 and $91 per month on top. Second, SSA uses a 2-year lookback per SSA POMS H 0110131. Your 2026 IRMAA is determined by your 2024 MAGI, which means a high-income year right before retirement can result in a significant Medicare surcharge even after income drops. Third, SSA POMS 011200005 defines 8 qualifying life-changing events, including retirement, death of a spouse, divorce, and work reduction, that give enrollees the right to request a new IRMAA determination using Form SSA-44, available at ssa.gov. Submitting that form with proper documentation is the official path to having a more recent income year applied to your premium calculation. These are the rules as CMS and SSA have defined them for 2026. How they apply to any individual's specific situation depends on that person's income, filing status, and the events in their life. Which is why working with a licensed Medicare professional is always worth considering. If this breakdown helped you, subscribe to Medicare Max. I put out new videos all the time, built the same way every time. Verified data, plain language, no sales pitch. Coming up next, we're covering the Medicare late enrollment penalty for Part B. If you're approaching 65 and you have employer coverage through your job or your spouse's job, you'll want to watch that one next. The rules are more specific than most people expect, and a missed window can mean a permanent premium surcharge for as long as you're on Medicare. To compare plans on your own, the official Medicare Plan Compare tool is at medicare.gov/plan compare. It's free, run by the government, and no sign-up required. You can also call 1-800-MEDICARE. That's 1-800-633-4227. Available 24 hours a day, 7 days a week. A real person can answer questions about your enrollment status and current coverage.